Bit of a puzzle about how it got to 65 or close to it based on global demand. In other words, that was way above pre-pandemic demand, which didn't seem logical. Now we're getting close to 55. Or 58? Does that feel more logical to you based on where we are in the world?
Well, first, thanks for having me. It's always wonderful to join you. You said it right there. It's the perceived notion of where we are in this pandemic, and it's never even markets themselves, but the recovery from this pandemic and the case count in general. I mean, nothing moves in a straight line. So I think we're much better than where we were months ago. But yeah, it's a reality now that you got lockdowns in Europe. You have New Jersey pausing their reopening, New York potentially pausing at some point or talking about it. And that definitely scares the market. I don't think that was the only factor in the market because, crude oil did start falling last week when some of the AstraZeneca news as well. I also think that there was some fear as we look to OPEC Plus on April 1st that they could be bringing production back online. And that was a little bit of a fear because Russia is definitely pushing to get production back online. Now you look at it and we have this pause in reopenings and new lockdowns, and that hurts the demand landscape looking out. So where this is a bearish factor now, it could really actually become a bullish factor as we look a week out and look to OPEC Plus.
And what do you think is likely to happen there? It would be a pretty closely watched one, I would imagine, based on a little bit of softening of the price here. It's unlikely, I would think, wouldn't you, that OPEC would actually get firmer on production, even though we've seen the price soften a bit here?
Yeah, I think that if it's a reality, like you said, it's a reality of where we are in this pandemic, and we're still in a recovery, and I think it gives reason for OPEC Plus not to add production back onto the market, which in and of itself will be a bullish factor. And I think again, some of those fears early on, especially when last week when there was news of President Biden calling President Putin a killer, and that was making its waves around. We saw the price of palladium surge like 20%. It was a massive move. Russia's the #1 producer in palladium, and then on top of that, Russia wants to bring production back online, and that's a way that they could kind of hurt the market in another way. So. I think overall, this sort of takes that narrative away that there's going to be additional production coming back online. And I think at the end of the day, that's going to be a bullish factor because we're back on this slow reopening with hurdles. But OPEC Plus is keeping production off the market. And that was the bullish factor over the last 6 to 9 months.
Well, I want to turn to parts of the equity market here and what you're watching by way of levels. So if we look at sort of I think you're looking at the mini futures on the Russell 2000 and the S&P. What are you watching in terms of what might be driving the markets? And I guess most importantly, Bill, what might help them set new levels? We're looking at the Russell here, and it's just coming back off the high, as we're seeing with a few of these markets. What sends it back up again?
Well, you're right. I mean, it's coming off the high in the Russell, a very unenthusiastic session in the Russell. It's down pretty sharply, like 2%. And the S&P is also pretty unenthusiastic reaction. Good, solid resistance that it hit today, 39.39. Couldn't really get through that level yesterday as well. And it's just become an unenthusiastic session playing out. Now we're in the middle of a new rotation. What has worked when in lockdown scenarios? What has worked? Work from home stocks. Zoom's up. You got big tech that Netflix is moving well, and so that a lot of that stuff is going back to what was working last summer. And but if you look back over the last month or two, or really last 4 or 5 months, you had the industrials roaring higher. You've had financials roaring higher, and rates were moving higher. The treasury prices were really falling out of bed. That has stopped happening. So banks have been getting hit because you got treasury rates falling back. You got industrials sort of consolidating lower now. A lot of what's been working the last 4 weeks or last 4 months is not working now. Now, that's not to say that it's not going to work going forward. I do think that this is going to be a short-lived hurdle. And I think we're going to work through it. I think this is a buying opportunity in the Russell. When you back out, the Russell 2000 has made a massive breakout this year. Remember, 2020, before the pandemic, it never took out the 2018 high. So last year in November, when we got the Pfizer news, it surged through that previous high and then finally set a new record high. And it's been, hasn't looked back. Yeah, of course, along the way, there's been good 5% corrections. The Russell is a very volatile index, these small caps, but each one has proven to be a buying opportunity. Until this uptrend's broken, I'm using these pullbacks to be a buying opportunity. I'm positioned in the Russell on the future side, and I'm also positioned in small cap growth and on the investment advisor side where I manage portfolios. So I do think the banks will bounce from this. I mean, they're still at a very elevated level. I think industrials are looking good. And I love the rails. So I think a lot of the economy is doing very well right now. Again, this is just a short-term hurdle. And you look at the S&P, the same thing. Very nice uptrend going back to March 2020 on the lows. So it's still very well intact right now. And I think these dips are buying opportunities.
And now we're looking at the S&P 500 here. It is closer to its all-time high. It's been kind of hovering around that level. And there does seem to be this kind of debate about the rotation, right, from growth to value, and does value finally have its day in the sun? What do you make of that as we see this market, even with that rotation going on, churning higher here?
I think these rotations have actually, proven to be really, really good thematical buying opportunities and fading opportunities. So I think if you're someone that's watching these rotations and you get days where tech is leading very well and some of these bigger names, you're able to allow that to play out, trim some to the upside, and then use the weakness for things like banks and small caps here as a good buying opportunity. I think it's been a very good rotation for the last several months, and I think that's going to continue to play out. So what I'm doing today is I'm adding to the Russell. Again, you said it, the S&P is right near the record high, so I don't think there's a ton of value. I mean, we're really positioned well on the future side and on the portfolio side, but I do think that the market is really going to continue to trend higher. And really one of the things I'm looking at is a 12-month rolling target in the S&P 500 of 4,600. Now one of the ways I do get that is looking at the downside from the 2020 sell-off and then look at it 100% range extension. That gives you 46 and change in the S&P 500. Now the Nasdaq has already achieved that 100% extension, so I think the S&P is going to make that move next.